I am worried about inflation. And apparently, I'm not the only one worried about inflation. Paul Tudor Jones recently said the number one issue facing Main Street, aka you and me, is inflation. In this video, I go over Paul Tudor Jones' recommendations to fight inflation. Hey guys, welcome back to my channel. Bienvenido everyone. Thank you for tuning back in. I really appreciate it. If you're new here, you're in for a treat today. So on my last video, I talked about what Jeremy Siegel thinks about inflation and what his recommendations are to, protect yourself against inflation. And some of the companies that he talked about that he likes are the ones that have pricing power and pay dividends, like utilities and consumer staple companies. But he also said he likes gold and real estate. If you want to watch the full video on that, actually, I'm going to link it down below, I believe, but it could be up here as well. Now, on this video, I just watched an interview that Paul Tudor Jones did with CNBC, and he is also sounding the alarms on inflation. You know what? I don't want to worry about inflation anymore. So let's jump into the recommendations from Paul Tudor Jones. The number one thing that he said was to buy commodities. Number two, inflation protected bonds. And number three, cryptocurrencies. Those are a little bit broad topics. So let's get into them and start with the easy one here, cryptocurrencies, right? And in particular, he was talking about Bitcoin. By the way, I don't know if you can hear that, but they're doing construction outside, so I'm sorry about that noise. They are actually contributing to inflation. So Jones has said that he sees Bitcoin as a store of wealth similar to gold, but Bitcoin is currently winning that race of being a better hedge against inflation. However, what I found interesting was that he said that in his portfolio, he only has cryptocurrencies, about a single digit percent, right? Of his portfolio, it's single digits, which it's kind of low. But, he's clearly not YOLOing all his money in crypto, but he does have a percentage allocated for this asset in his portfolio. So I agree with that, having a percentage of crypto in the portfolio. But I would be cautious at this level adding a big number or a bigger percentage to your portfolio, right? Now that Bitcoin is about, $60,000 or so. The other thing about Bitcoin that I did not know about that makes me nervous, especially at this level, and, right before the Fed is supposed to start raising rates. So listen to this. Back in June 2020, Bitcoin was about 9,000 a Bitcoin. And Plan B, who is a famous Bitcoin analyst, I did not know about him, but now I do. He showed how statistically, that's a mouthful, how statistically correlated Bitcoin was to the S&P 500, right? Now, put that into perspective, just like you saw how correlated it was on the way up, my question is, what is going to happen when the Fed starts to raise rates? And typically when, the Fed raises rates, the companies that suffer the most are the ones that have a high PE or have a high price to sales ratio, right? And if the S&P is so correlated with Bitcoin, and Bitcoin is, pretty much like a growth asset right now, just like other growth companies, would they decline in tandem, right? Just like they went up, would they decline in tandem? And that is contrary to thinking about Bitcoin, rising when you see more inflation. So I don't know what's going to happen, but I thought that was pretty interesting. And I don't hear many people talking about how correlated, Bitcoin is to stocks to a certain degree. Now, on the other side, gold, which Professor Siegel, in my last video, like I was talking about, he mentioned it that he prefers it over Bitcoin, has been an inflation hedge that many people have used in the past. I think now, if you compare, I guess, gold versus Bitcoin right now over the past year, there's no comparison, right? Bitcoin has been a much better investment than gold. Gold is actually down like about 5%, and then Bitcoin is up a lot compared to gold. However, I think or if inflation continues and the Fed starts to raise rates, then gold may be an asset to own, at least for part of your portfolio, in order to protect yourself against, inflation and maybe growth stocks falling. Now, the second recommendation that Paul Tudor Jones was talking about was commodities. So let's talk about what he means by commodities. You can invest in actual physical commodities, right? Or a company that produces or sells those commodities. But let's take a step back actually. Let's define commodities, which are basically hard assets, and they're usually broken down by agricultural commodities, energy commodities, and metals, right? So a few examples here. On the agricultural side, we have wheat, we have coffee, we have sugar, we have rice, we have cotton, we have lumber. And as you can see the trend here on the charts, price continues to increase on all these commodities. Over the past year, they are going up. Now on the energy side, we have crude oil, gasoline, natural gas, and you see the same trend, right? Prices are going higher. In the metal side, we have steel, we have copper, we have silver, and they're all trending higher as well. The thing about inflation is that it takes time to work its way through the system. What I mean by that is that, these commodities are inputs to many of the products that we buy, like, if you think about food, toilet paper, shampoo, real estate, cars, clothing, you name it, right? If commodity prices go up, the prices of these products will eventually go up as well. So going back to what you can do about investing in commodities, right? One is to buy the actual product. And for that, you would have to go to the mercantile exchange, right? I'm sure you can do it online, but buy futures on those commodities, right? And I don't think anyone watching here actually is going to do that or is doing that. But if you are, leave me a comment down below. On the other side, right, if you're trying to invest in companies that have commodities like the ones that we just talked about, I'll give you a few examples. Let me get this one and I'll show you what I mean. I'm gonna erase that one first. So the first company that I think about is CVX, which is Chevron, which is a multinational oil and gas conglomerate. I think that's a good one to have because that'll take, that is, since inflation is rising all over the world, then this would be one that would benefit from it. But if you're looking for something more local, then I would suggest DVN, which is Devon Energy, or the other one is Pioneer Natural Resources, which is symbol PXD. So these are US, and that is for world. Right, so that's for US and world. So these are just examples to give you of what, like we were talking about, those commodity products that they sell. In this case, these guys sell crude oil and natural gas. But if you want to look into more stock ideas or ETF ideas, look back at the video that I'm going to link down here. I have some more ideas there for you to take a look at. All right, and the last thing that Jones mentioned was inflation index bonds. So not regular bonds, but the ones that adjust their principal based on the rate of inflation. So these bonds can be issued by basically any organization, but you see them mostly issued by the US Treasury. So yeah, currently the US Treasury is the largest issuer of these types of securities, and they're typically referred to as TIPS. I'm sure you've heard that term, which stands for Treasury Inflation Protected Securities. You can actually buy them directly. The website is treasurydirect.com, I believe. But I would suggest actually looking at these 3 ETFs that invest in these types of bonds. And of course, do not expect to get a 20 to 30% annual return on any of these ETFs. These are just modest gains that protect you basically against inflation, which, to tell you the truth, it's really important because if you remember, the latest inflation report was 5.4%, which is the highest it's been in almost 30 years. And actually, Paul Tudor Jones mentioned it on his interview that he expects that number to actually go higher as energy prices work their way through the economy. Well, guys, I hope you learned something new today, and I hope you're getting ready and protecting yourself against inflation. Let me know in the comments down below, actually, what is your favorite ETF or stock to protect yourself against inflation? If you found this video valuable, please give it a like. If you like the type of content that I am producing in this channel, be sure to subscribe. And with that, that's all I have for you guys. So I will see you on the next one. Adios.